Well, unfortunately, I got to give everybody a little bad news here. The stock market collapse, crash, whatever you want to call this, is set to get even worse. I want to show you what's going on now in the market. It was interesting. I was watching some CNBC earlier and some Fast Money, and I just wanted to hear kind of, what everybody was making of this. And everybody saw Google earnings, and the guys were like, I don't understand how this stock can go down, those sorts of things. And I want to explain what I think is going on in the market right now. I think it's far deeper than a lot of folks are giving it credit, because they're looking at some of these numbers coming out. They're thinking certain things should be transpiring, and those things aren't happening. And this leads to kind of some max confusion here, where people are like, what is going on? What's this massive divergence right now? So I think everybody saw what happened today. A complete devastation in the market. The NASDAQ was down 4% today. 4%. We're on pace for the worst month for the NASDAQ since 2008. This could be the worst month in the history of the NASDAQ. It depends on, PayPal, Meta still has to report, Apple and Amazon still has to report. If those companies don't come through, and they were to disappoint as well, which we'll see what happens there. But if that was to happen, this might be the worst month in the history of the NASDAQ. And that's just crazy to think about. We're really going through that dramatic of a month. Regardless, this is going to be one of the worst months the NASDAQ has ever gone through, essentially. Now, the Dow is also down 800 points. The VIX is spiking super high again. I mean, another day or two of this, and the VIX is going to be back to where it was, at the peak fear of the market back when, the whole Russia-Ukraine situation started. Now, after hours, one of the biggest companies in the world reported earnings. Google reported. I would give them an A-. Their YouTube numbers were disappointing, which I thought were going to be disappointing. But outside of that, it was actually really, really good. And they announced a $70 billion buyback, which if they didn't announce that, who knows where the stock would be right now, essentially. But how's the stock rewarded? It's down 3% after hours, which is another, maybe not $100 billion in market cap, but pretty darn close, essentially. And so when you're looking at Google here, it's very, very important that everybody watching this understands what's going on here. Google did not just report a disaster quarter. This company reported a very good quarter, but it was not a perfect quarter. And because it was not a perfect quarter, and we're in this devastating market right now, the stock falls. Now, this doesn't make any sense on a long-term basis. We all know Google's balance sheet's in a great place, income statement's in a great place. They got a ton of growth, and this is a type of company that will grow regardless of the economy. But in this sort of market, if you don't come in with perfection, you will go down. And Google did not come in with perfection because of the YouTube numbers. And like I said, if it's got to be an A+ right now. If you're not an A+, you're hitting a new 52-week low. And essentially, we'll see where Google trades at tomorrow. Hopefully for Google shareholders' sake, it bounces back. But, it's very possible this stock could hit a new 52-week low in the trading tomorrow, depending upon what happens there. Meta, on the back of this Google news, essentially, just pulled down to a new 52-week low. And what you're seeing in the market right now is countless stocks, not just small caps and mids. It was one thing with the smalls and mids, but countless of these big dog companies at 52-week lows, multi-year lows, all-time lows. And we're seeing that with countless of these companies right now, and it's extraordinary to see, and everybody's like, my gosh, when does the pain end, right? Texas Instruments, we got a problem, okay? Texas Instruments reported, and they reported some disappointing guidance. And with kind of those, like I said, in this sort of market, you can't disappoint. And yet, look at the stock after hours. It's going to likely be at a new 52-week low tomorrow, essentially. And so Texas Instruments, you got to understand, when it comes to Texas Instruments, they're in everything from the biggest smartphone manufacturers to Texas Instruments is, that's the economy at the end of the day. They're in everything. And so if Texas Instruments comes out and reports little troubling numbers, it not only worries people about Texas Instruments, but it worries people about the entire semiconductor companies. And if you talk about semiconductor companies, worries there, then the next step is Apple, right? Because guess what makes up that iPhone you buy? A bunch of those semiconductor companies, right? Skyworks Solutions, Texas Instruments, Qualcomm. That's all the chips that are in there. Cirrus Logic, all those companies. That's what makes your iPhone tick at the end of the day. And so the next thing it hits is Apple. The next thing it hits after that is the entire market sentiment, right? And these stocks are all basically at multi-year lows, 52-week lows across the board. It's insane to see. Then we get this news after hours, okay? Robinhood just announced they're going to cut 9% of their full-time employees. If you don't, and so there's something much bigger to pay attention to here with Robinhood. And I understand, Robinhood isn't a stock that many people probably hold that are watching this video, and I don't hold it either. But there's a very important thing that's going on here with Robinhood that everybody needs to understand. For a long, long time, a company like Robinhood was given a pass. They could lose a fortune of money and no one blinked an eye. And the valuation just kept going up as long as they kept adding more and more people to it. It was like, we're going to keep bumping up your valuation as long as you continue to grow. Grow that top line, grow users. That's all we care about. Okay. Now, the market has shifted massively to now all of a sudden we care about profits. So if that's the case, what does a company like Robinhood have to do? Robinhood, in order to get profitable, they're going to have to cut employees. Now, the bigger issue with this is that goes way beyond just Robinhood is you got to understand, like the VC space is made up of massive amounts of companies that are unprofitable companies, right? The old school model for building a business was I need to come out with a product or service, make money from that, and then I'll use that profits to expand my business. Well, what's going on in Silicon Valley for the last decade plus is we're going to throw money at companies that lose money in hopes that someday they make a lot of money, right? But now this is all shifting right beneath our feet, essentially. And so companies like Robinhood have to cut employees, right? Now, we just heard last week that Wells Fargo was cutting a bunch of folks that were in the mortgage business, right? Because that demand's starting to fall through the floor, refinance mortgage, those sorts of things, right? Now, if all of a sudden you talk about Robinhood and you could talk about other of these money-losing companies cutting staff, cutting employees, then you start to worry about jobs, you start to worry about unemployment rate. And keep in mind, the market's been falling dramatically, and we're in an environment right now where unemployment's at near all-time lows, right? What happens when the headline starts to read, the unemployment rate just climbed? What happens in that sort of market, right? I think that's fair to talk about. A company like SoFi, a lot of people, I think actually a lot more people are investing in this one that are retail folks in something like Robinhood. It's very possible SoFi could cut employees. The whole fintech space is a disaster right now. And the reason it's a disaster is it was funded by this cheap money, VC money for the longest time. Then you went into an ultimate boom cycle, which was 2020 and 2021, right? Especially the first half of 2021. Now, if a lot of folks don't have money to invest and they already signed up for these products, and so these companies are just in a bad situation. And fintech's a disaster, and it's going to probably continue to be a disaster for at least this year. We'll see what happens in 23, but it's just a messy area, okay? Now, if you're looking for some good news, I got more bad news to share with you in this video, but I do have some good news, okay? And I like to always call it the way I see it. Microsoft reported, basically right around an A+ quarter. And thank goodness they did it, because if they didn't, I can tell you that stock would be down big. And the thing was, Microsoft turned negative after hours. And I don't know how many people actually saw this, but Microsoft stock turned negative after hours. It's down like 2% plus. Google stock at that point ended up falling almost 7%. And the reason being is if Microsoft was pulling down, it was going to pull down Google as well. It's going to pull down the entire NASDAQ. So the fact that Microsoft is climbing after hours is giving some relief for the NASDAQ for now. The key word is for now, okay? And so that was just very, very interesting. I don't know how many people saw that. And as Microsoft came back, it brought Google along with it. And that's why Google's only down 3% after hours now, when at peak it was down like 7% or so, okay? Now, we have an issue, obviously, with Tesla. This is a massive retail investor stock, but it's also a massive stock for the entire market. This Tesla situation is getting messy, and it's getting messy pretty darn quickly, okay? And the reason being, essentially, when it comes to Tesla, is now with this Elon Musk Twitter situation, everybody's starting to get very concerned about Elon Musk having to sell a bunch of Tesla shares in order to fund this acquisition, okay? Now, the other thing is that people are even being more scared about is not that Elon Musk would necessarily just have to sell Tesla, but that he would take out a loan against his Tesla shares. Now, the issue with this is if Tesla shares were to fall to certain prices, which is a complete possibility. Like imagine we're in a situation where the economy starts to get devastated here. Interest rates, the Fed continues to raise. They lag on the whole situation. Next thing you know, Tesla orders just aren't coming in, right? Which is, you have to be in denial to not at least understand this is a real possibility, right? And so if we end up in that scenario, Tesla stock falls dramatically. The next thing you know, Elon Musk has margin calls, and I know it's crazy to think about the world's richest person having margin calls, but it's very much a real possibility if you leverage up and leverage against your own company shares. And next thing you know, Elon's also in a situation where he's had him dump massive amounts of Tesla shares on the market at a time period when the buyer momentum is not out there for Tesla stock. That would be an absolute disaster for Tesla stock and for Tesla stock price. And so, that's the type of scenario where you could see the stock down 50, 60, 70%. So this is something that obviously a lot of people are concerned about. And I understand. And as a Tesla shareholder, you should be concerned about this 100%, especially if you're anybody that cares about the more shorter term things in nature, which is most of Wall Street. And so that's where we're getting into some real danger in regards to this Tesla situation. I don't see this fixing itself in the short term. Because either Elon's going to have to sell Tesla stock or he's going to have to leverage up against his Tesla stock, which puts him in jeopardy of margin calls against Tesla stock in a situation where Tesla stock was to fall. So it's a messy, messy situation. And you say, well, if Tesla stock only goes up, okay, perfect. That's not obviously a reality, right? And we've seen Tesla stock, the amount of times I've seen Tesla stock since I've been tracking the stock fall 40% plus in a matter of 6 months. Oh my gosh, I probably couldn't count them on both my hands. It's an insane amount, okay? Now, the Federal Reserve. So here's what I think is going on from Wall Street. I think Wall Street is not very enthusiastic. Big money, let's call it big money. The big funds, big money that's on the sideline, things like that. I think a lot of these folks aren't that enthusiastic about putting money in the market right now because they're looking at the Fed and they're like, the Fed is totally against the market right now. They want to raise rates, right? They want to deleverage as much as possible. They're so hell-bent on that we could be in a scenario where the stock market continues to fall, real estate starts to collapse, and the Fed lags on the whole situation. And at the earliest, the Fed could U-turn maybe in the fall time. We're like, okay, we're going to stop raising rates. We're going to flip the other side, right? This is a big concern, in my opinion, in the circles that control a lot of money. You're not going to hear this talked about in mainstream. But I can tell you in big money circles, in my opinion, this is being talked about right now. In a lot of those circles are saying, I'm not deploying until Fed turns. And Fed at the earliest is going to turn in the fall time. And so we have to go through an entire summer where the Fed's still working against the market. And imagine a scenario where companies' earnings get worse. Guys, that's where you start talking about it gets ugly fast. So the big money circles are worried about recession fears, plus on top of that, Fed working against the market. And I think that's just another reason why you see a lot of these stocks just continue to collapse. Now, if you want some good news, if you want to call this good news, we have now entered correction on the Dow. Correction means a 10% plus move. We've entered correction on the Dow. We're well over correction now on the S&P 500. We're in full-scale bear market now on the QQQ, which is the NASDAQ, and we're in full-scale bear market on the Russell. Now, if we look at the fall of 2018 dip, essentially, we basically hit bear market on all the indexes, right? If you want some good news, we could start approaching that, right? And especially if you imagine a scenario where Apple was to fall, the biggest market cap, maybe some oil and gas stocks fall, things like that. So there's something there where we're starting to get down there where we're getting pretty darn devastated. Doesn't mean it can't get worse, but we're starting to get down there where people start feeling comfortable. And I know the market will feel a lot more comfortable, in my opinion, once these babies hit bear market as well. That's a kind of almost like a rip the Band-Aid off situation. When it comes to oil and gas stocks, these I think are going to be in real jeopardy to start falling in the summertime. And these have kind of been a hideout spot and a sweet spot. I think it's going to be a hot travel summer, which is great for oil prices. Great thing. But if you start talking about real recession fears, oil will spike down in that type of scenario. And so imagine a scenario right now where you got everybody increasing, supply of oil. And then all of a sudden you get into a scenario where it's like, oh, shoot, man, we might go into a recession and this bump up in travel over the summer starts to fade. That would be an ugly situation for oil, and obviously all the oil and gas stocks in those ways would pull down, right? Now, Visa, I got some good news for you. As I said, I'll share the bad news, I'll share the good news. Visa reported earnings. This is a blowout quarter. They reported great numbers. They came in at almost $7.2 billion versus $6.83 was expected. Payment volume was up 17% in the quarter. Processed transactions rose 19%. It was great. The Visa earnings were great. And Visa is the economy at the end of the day. So I got to say, Very, very impressed with the Visa earnings. But the issue, this is a major issue. Everybody sees his Visa earnings great, right? And the issue is, everybody says, yeah, it's great right now, but wait till a quarter from now. Wait till 2 quarters from now. When, people say things are going to hit the fan, right? Inflation is going to have fully caught up with the consumer. And this is the last quarter Visa reported, right? But what's going on now with Visa? What's going to go on in 2 months from now with Visa? 3 months from now with everybody's rent skyrocketing, inflation's gone crazy, no stimulus anymore, and those sorts of things. And that's the concern. That's the problem. Is people say, yeah, it was great last quarter, but wait till next quarter. That's when it starts to get bad, right? And it reminds me of a scenario. I have a close friend that's always been a big shareholder of Micron, or has for many, many years. And my friend always gets very, very frustrated because of MU stock. It's always very, very disrespected, he feels, because it always trades at insanely cheap PE. I mean, it's very common that you'll see MU traded a 10 PE or under a 10 forward PE and metrics like that, which is, for the market, it's insanely low, right? But the thing with MU stock is everybody always looks at that stock and they say, yeah, it's great right now. Memory prices are great right now. MU's making money right now. But next year, that's when they're going to run into troubles. And so you always are in this constant scenario where it's like, it's great right now, but it's going to get bad, and you got to be worried about next year. And so that's a problem in this market right now. Everybody's very caught up into, yeah, maybe the company last quarter was good, but wait till the next quarter, it's going to be bad. That's when things are going to hit the fan, right? And so this is the type of psychology we have going on in the market. It doesn't mean it's right or wrong. It's just what we have to deal with right now in the market, right? D.R. Horton reported amazing. D.R. Horton's a big home builder in the United States of America. Their earnings were incredible. Incredible. Revenue, net income, everything. Incredible, except one very core thing. Net sales orders decreased 10%. So now we're in a situation here with D.R. Horton where new sales numbers are starting to fall, starting to decrease, right? Interest rates barely started going up in that last quarter. What about next quarter? When interest rates are all 5% plus, right? What about the following quarter when we could be looking at mortgage rates of 5.5%, 6% on average, if not higher than that? That's where you get into some real concern here. And so with a D.R. Horton, no one wants to buy D.R. Horton right now because they're looking at this and like, dude, yeah, so what? Their last quarter was good. It's about to be a bad situation. And when real estate gets bad, sometimes it can be bad for a year. Sometimes it can be bad for several years, right? And if you look at the housing stocks, no one wants to own the housing stocks right now. It doesn't matter that their last quarter was great. It doesn't matter what their current revenue is and their current net income is and their current margins are. Everybody cares about where this company's going over the next 6 months, over the next 12 months, and people say housing could be in a lot of trouble. I saw Rocket stock today. Stock's $8. I like Rocket for a long term, but I'm not buying the stock yet. The reason being is I don't think the refinancing and mortgage are going to magically turn better anytime soon. Maybe in 23 we can have that conversation, but not right now. And so at Rocket, it's like $7, $8, $9. It's just like, it's too messy. And it could be messy for quite a while, okay? And so that's the market we're dealing with. By the way, if you want to sign up for the Hungry Bull newsletter, we deliver all the biggest news, in the markets and everything going on directly to your inbox daily. It's absolutely free. Check out pinned comment down there. But as for me in this sort of market, I'm just focused on accumulating shares. 2022 for me is an accumulation year. Don't focus on anything else. Don't focus on real estate. I don't care what is going on with real estate. I ain't buying no properties, not buying any cars this year, not buying any watches. I don't care what it is. Stocks. It's an accumulation year. We get these freak years every once in a while. It can get a lot uglier from here. I'll be ready to buy. And that's just where my focus is at. Buying, increasing my ownership in these companies that I love for the next 5 years, and not worrying about the next 5 months, because it is a mess right now and it could get messier. And I think that's what big money sees, and they understand that right now. So anyways, guys, much love as always. I'm going to try to keep you up to date on all this. It's a crazy market, and it's going to continue to be a crazy market. And have a great day.